I mean, when you look around, you look at some of these balance sheets, they're marked to model. It's a whole bunch of nonsense. I mean, we've been living in the golden age of fraud, and now here comes the wrecking ball. I mean, we're going to see some real reckoning.
Hey everybody, welcome back. Today we are going to be speaking with James Anderson from SD Bullion, and we're going to be talking about the bank failures, the Fed tightening cycle and how they're taking a break from that, and possible rate cuts coming at the end of the year as well. And then we're going to talk about how that all plays into gold and silver over the next year. So let's get into it by welcoming James on the channel. James, how are you today?
Great. It's always good to be back on the Silver Secret channel. So thank you for having me.
Oh, it's a pleasure. We're going to jump right into it today, and I want to start with the weakness in banking right now. We had another bank that was just bought out just the other day, I believe by JP Morgan, and there's a lot of other concern about other banks, and I know you know a lot about that, so just dive in. What's going on?
Right. So the last few weeks on the SD Bullion, channel for YouTube, I've been making videos around this entire fiasco of what's going on with the regional banks. Really just looks like a huge consolidation of the banking systems coming our way. And this is just the beginning. My concern is that this is going to keep dominoing and getting larger and growing. And it'll be going on for a while, maybe not, this crazy thing happening overnight, but you're going to see a lot of banks kind of folding away and consolidating further as we move toward a more consolidated bank industry. Right now in real time, there are many regional banks. I think there's like 10 or 15 that are just hemorrhaging losses on their stocks, right? And once a stock goes down on a bank, you pretty much know it's going to zero in terms of its total value, and someone's going to come in and buy out the old, the old retail and business banking contacts, and try and get those people to come with them, right? But that's really all you get. I mean, you just get further consolidation generally, and a certain percentage may go along. We'll say JP Morgan buys it out. Maybe they'll go to JP Morgan, or maybe they'll go elsewhere. But right now, at this moment, there's a bank that I worked with when I lived in Santa Monica in 2009 to roughly 2015 era. I'd first gotten there and I thought, oh, I got to change banks because I was so sickened by the global financial crisis. I couldn't use a mega bank. So I had to change out of a mega bank, and I went and did the research on which banks were regional and, not involved with so many derivatives and all this stuff. And I figured out one of them, and they're one of them that is literally hemorrhaging today. Okay. I mean, I'm not going to, well, I will. It's called Pacific Western Bank. I'm a retail public customer of them. And it's like, I'm just going to say it. They are hemorrhaging. And I've basically been tweeting saying like, look, I'm out. ACH1, ACH2, next ACH3, slowly but surely just kind of backing away slowly, not making a scene, but it's going to happen. I think it's going to go to zero. What I'm going to do is I'm going to keep a few $100 in there so I can document how this goes, because I want to see the folly of whoever buys this out and how it's done, So I think it's going to go to zero. I'm moving out. I'm moving to a credit union that's much more, much sounder in terms of their balance sheets and then in their business practices. Pacific Western, when I first got with them, it wasn't that great, but it's gotten even worse because they got so tied up with all these tech companies and all this high flying nonsense. And I'm sure the CEOs were banking and whatever, they're making a lot of money, but in the end, their practices weren't sound, and now they're going to zero. That's basically how I feel about it. So, I'll see it. I'll be directly reporting it on the SD Bullion channel. So I hope that gives some insight to, kind of what's happening.
Absolutely. You had mentioned that you had went to a credit union because their balance sheets are more sound. Is that something that's typical? I mean, if someone's looking to get out of big banks and move into something like a local credit union, is that generally a good idea?
Yeah, I think so. I mean, there's one I work with. It's Alliant out in Chicago. It's pretty sound. But there's many great credit unions in the United States, and you can, do your own due diligence. But yeah, that's it. I'm not putting up with this. I'm not working with people who have terrible business practices in banking. That's not happening. And I'm not working with people who are involved with derivatives or any type of chain reaction nonsense where all of a sudden, my account, I can't get into it, or they get hacked or what have you. It happens all the time with these mega banks. So, I've been very impressed thus far with their service and their level of service. So that's where I'm going. Definitely one of my accounts will be there.
What do you think's causing all of this trouble with banks? I mean, obviously you
Well,
had just
yeah, it's obviously the fiat Fed just jacking up interest rates, and everyone caught flat-footed and their balance sheets wrong-footed. And also, to overextended in various sectors that are just getting crushed. Go ahead.
Well, I was just going to ask, do you think it's not just bad business decisions, but maybe even a little bit of corruption
Oh,
as well?
oh yeah. Oh yeah, for sure. I mean, when you look around, you look at some of these balance sheets, they're marked to model. It's a whole bunch of nonsense. I mean, we've been living in the golden age of fraud in corporate, United States for a long time. And now here comes the wrecking ball. I mean, we're going to see some real reckoning. It might not happen tomorrow, but it's slowly going to happen over quarters, and then there'll be probably one event that everybody, calls out. It's kind of like the global financial crisis of 2008. That all didn't happen in one moment. That happened quarter after quarter after quarter, with a peak ecstasy quarter in the third and fourth, So why wouldn't it be similar in the second half of the GFC, which is what I think we're starting to look at right now. This is what the next half of it looks like.
Makes sense. Do you think the Fed tightening rates had a lot to do with that as well?
Oh, yeah. They back themselves into this corner. This is on them. This is on the U.S. Treasury. This is on those folks who've been in charge. All this is on them. I mean, really. I mean, they mismanage things just flat out, and they've been greedy. To be quite honest about the way that those insiders have been trading. That actually work at the Fiat Federal Reserve. I mean, look at those folks. Are you kidding me? Right? I mean, have you done research about what they've been doing, the business practices, how they've been acting, and the insider trading very often this last few years? So, yeah, it's rotten from the top down, and I think you really got to think twice about what institutions you actually have any faith in.
Yes, I want to get into gold and silver as well, and how gold and silver plays into all of this. I know yesterday, I believe, or was it 2 days ago, they had announced another 25-point rate hike, and then also signaled that they're going to kind of take a pause from the tightening cycle. How do you think that plays into the next couple of months, and then where does that play into gold and silver as well?
Yeah, on my channel, I was doing a little bit of discussion about this, especially on the silver side. I mean, the bearish case, which is made, and I can understand it. The bearish case says, second half of this year, people claim the Fiat Federal Reserve is just going to keep going with the rates, and everybody who thinks there's going to be rate cuts by the end of the year are going to be disappointed. And there's going to be, maybe some deflationary crash of banks, and you're going to have spot price sell-offs, and silver going back toward 18, right, in spot price land. Okay, that happens. You think bullion? Where do you think that's going to be? Right? It's going to be right where it is right now. That's probably where it's going to be. Okay. Or maybe higher. That's how stupid it gets. You guys know how. I mean, we've been through 2020 COVID. You saw how spot price went that way, bullion went that way. Same story. And so that's the bearish case for the second half of this year. I think the bullish case is they cut rates before the end of the year. We get infinite QE kicked off already before the end of the year. They react very quickly to the deflationary collapse that's probably going to come before that. And the recession troubles that'll come, and they'll probably go infinite QE before the end of the year, and you'll see spot silver chase toward 30 and possibly bust through that. It's possible this year.
So you're saying they're looking at possible rate cuts at the end of the year?
It could happen. Yeah, it depends, right? I mean, if you have a real bust, like a deflationary big time hit, and you can tell it's a huge recession, what do you think they're going to do? You think they're just going to come in and be like, "Oh, we're keeping rates pat, please"? It's going to be emergency meeting time, and they're going to come out and make all these programs, and everyone's going to know what's up.
I guess I just find it funny because they certainly didn't react to the crazy inflation fast enough.
Oh, of course. I mean, but you do have to remember that during early 2020, they kicked it off pretty good with the COVID quickness, right? There was every kind of pie in the sky program and all types of grips going on. I mean, the PPP loans and all the hedge funds is getting ridiculous funds for what? For sitting in an office or sitting at home and doing trading. It's a joke, right? So yeah, they were quick, they were fast. They'll have to be fast this time because the system's even worse and more levered than it ever's been. So if they don't act fast, they can chain react and get even worse. So, my expectation is they'll be quick to react.
All right. So what do you think would be the best play if anyone wants to kind of prepare for what's coming or what you believe is coming? What do you think the best course of action would be for them?
Right. And I mean, I recently tweeted about this. It's funny because Chat GPT is kind of all the craze, and people have been using it to do things. And somebody was smart enough to ask Chat GPT, in recession, well, how can I recession-proof my portfolio, right? And the AI bot spat back out at it, what they suggested, right? And lo and behold, the AI bot understands that about 20% of your liquid net worth should be in physical bullion. And it explicitly stated gold, silver, and other precious metals. So I presume some platinum, right? So you're talking about 3 different precious metals the bot spat back at you. And, technically in data, in terms of, data history, in terms of full fiat currency era, having some exposure to bullion has always made sense. It's always worked in the long term. And now, especially, I think it will work for not only preserving your wealth and your purchasing power, but also eventually the valuation gains that are coming in terms of what you can buy in other asset classes and such like that with the value gains from the bullion, right? So right now is you're doing both two things. You're doing it for store value, which is number one, right? What you save, you want to keep. I understand that. And then as well, secondly, you have upside gain when we go into the next commodity bull. Silver and gold are going to do very, very well, especially if it's commodity bull and a monetary store crisis. I mean, you're talking about absolute firework potential. So what do? You do your own due diligence. I'm not your financial advisor.
Right.
Of course not. But I mean, I know what I do. I'm pretty aggressive, right? And so it's a question of it for everyone. They have to do their own due diligence, talk to a financial advisor, what have you, all the disclaimers. But that's their choices.
So let me ask you this. Look at the difference in spot price and what actual bullion is selling for. Do you think that there's going to be a bigger disparity, especially if we start cutting rates later in the year? I heard you kind of hinted on that earlier.
Oh, yeah. Yeah, for sure. I think what you're going to end up seeing is if there's enough banking issues. Look, bullion loves bank failure, okay? That's the way it is, okay? When banks fail, people run into it, and they bring it. Not only do they buy it on like a small retail level, but I'm talking the 6-7 figure buys are happening. And those are the ones that take the volumes of supply that's available. That's the stuff that creates these huge backlogs in delivery times, right? So those are the people, when they come in, the higher net worth people, they're the ones that squeeze this thing, right? And then that's where you see the concentration of premiums jacking up and the lack of time and delivery for products, and these lead times going so long, right? So that's the silver side. And we're not even getting into the gold side yet. Eventually, I'm talking about, first the silver squeeze, it eventually leads to the gold squeeze. In a store value crisis, gold even gets squeezed, and you can't get any bullion. So if both of them are happening, silver will be the first. It'll front run gold in that sense. Well, I'm talking long term in this next 4 or 5, 10 years. There's going to be some type of huge peak, I think, in this whole thing. I'm not sure how it'll be. It'll probably be fear driven, and then maybe followed by greed, then fear again. I mean, it's a combination of the two when it comes to these precious metals. But the most powerful emotion is fear, and that's when banks fail. That's when you see fear come in with big buy, and that's what's been happening lately.
So, James, I actually follow you on Twitter, and I saw a tweet from you the other day talking about how a decade from now, we'll be looking at 2,000 gold like we look at $200 gold today. So that's a pretty big estimate for where gold's going to be. You want to give me a little bit more info on that? And I'll throw it up on the screen for everyone watching.
Of course. Yeah, so in early 2000, 2001, gold kind of bottomed out from the 1980 bear market, 1990s bear market. I think the bottom was like 260, 256 spot. And there were a lot of people who bought pretty heavy then, and they're probably still holding and happy with what they did, at this moment. And they're maybe handing it down to their kids, what have you, right? But I mean, that was a nice bottom, obviously, and a buy. But like when you look at the chart, right? When you look at the stair step of that chart, right? What do you think is going to happen next? There's another stair that's eventually going to be built, right? And I'm not sure what the time frame is, if it's 5, 10 years, and how it's going to play out. All the minutia of that, I do not know. But I can see the stair step shape. And I kind of get a feeling that we're going into another stair step. And ultimately, we're talking about the underlying reserve currency of the world and other fiat currencies around the world. All of them are going to devalue to gold and silver. They're all going to bow, to money, the ultimate monies. They're all going to bow. And so that will be, it'll be a wild ride in silver. In gold, it'll be a little bit more relaxed. And like, if you remember the 2002 to like the 2011 high, that entire thing, there was only a few gyrations of chaos. The GFC 2008, there was a little bit of a chaotic time frame, but for 10 years it was pretty steady. For gold especially, that'll be similar. I mean, I think for gold, and it'll be even probably stronger because that was only the beginning of the secular 21st century gold bullion bull, and we're getting toward the end of the part, the mania part, the place where all of a sudden gold and silver become cool again. Like where everyone's rocking gold and silver when even. I'm talking about yuppies buying bullion. Like that's what I'm talking. Once you start seeing that, you're starting to get into a mania. I mean, here's the other thing. It's like, right. I'm not saying on a nominal basis, right? 200 to 2,000. And then one day in the future, you're going to look back and be like, 2,000 gold. I thought that was expensive. Right. I mean, you're going to be thinking like, gold's now 4 or 5,000. Gold's now 7,500. Oh, now it's doing something even more ridiculous. It's not even about the fiat number go up. It's really about value. How much can gold get you in terms of real estate, in terms of, the S&P 500, the general U.S. stock market, the global stock market. I mean, literally, you can do those measures by ounces of gold over massive time frames. And you can see on charts, okay, well, now's maybe a time to sell off some of my gold and go somewhere else. You don't necessarily always have to be in gold. You can keep a position always, because we all suffer in a fiat fantasy land, world. But ultimately, I mean, when you do really well in a gold position or in a silver bullion position, selling off some, taking those proceeds, using them for real estate, using them for other things that you need in life to get by, other things that help you generate money in your business. Who knows? There's a million reasons why you might. Well, there's about 5 big reasons why you'd sell silver. I saw the video. 4 big reasons. I saw your video recently. That was a really good one. He did a really good job. The 4 Ds. If anyone didn't see that, it was just a week or so ago. That was a really good one.
Yeah, about a week ago.
There's a whole myriad of reasons why people sell, but usually it's not generally. How would I say? If you're a bullion buyer for the long term, it's very rare that you come back and sell. It's only when things are really going up that you start seeing the astute ones come in and be like, "Well, I'm going to sell this mint case of silver," and then a few months later they'll come in. I got another mint case of silver. I'll sell. Thank you. That happens a lot. And this guy probably at home has like 50 of those things, right? So, I mean, that's kind of what you see in a bullion bull mania. There's people who bought early, who've been waiting for this for a long time, and they smoothly take chips off the table as they're winning in this poker game, as they're winning at the casino. They have one pocket full of bullion, the other pocket, this fiat cash is going in and going out and buying real other assets that they want to buy, right?
Yep. Getting your money out of fiat currency. We talk about it all the time.
Yeah, exactly. I mean, at the bare minimum, you need things that are going to be inflation proof, that will hold their value. So we're talking about tangible things that are real, really valuable, that will not, they'll appreciate when fiat currencies are not stored value.
Absolutely. And I don't think fiat currencies, really have ever held as a store of value. For a long term at least.
They trick everybody for the short term.
Absolutely. And with all the pressure that you were seeing on the US dollar, it's crazy to think about what really could happen if we start to go that way as well.
I really don't want to think about that. It gets scary sometimes.
It really does. Well, James, I think that's all I had for you today. But listen, it's always a pleasure to have you on. I'd love to have you on again in another month. And guys, I said I follow James on Twitter. I hope you do as well. So I'll put a link down below. And of course, James, I can't thank you enough for being here, my friend.
Oh, yeah, of course. And everybody out there, come to SD Bullion's YouTube channel. You can check out my weekly SD Bullion market updates. And my Twitter handle is @JamesHenry.
Absolutely. And I'll put a link for all of that down below. So make sure you go check them out. Thanks again, James.
All right. Thank you so much.
So like I said during the interview, I will put all of the links in the description below, so make sure you go down there to check them out. Additionally, I'm going to put a video up above me, and if you haven't seen that yet, make sure you go over there and check it out right now. I'm sure it's a good one. And additionally, don't forget to subscribe and help us continue to grow. I can't wait to see you guys in the next video.